Cash flow statement. The lie detector. The only report that cannot be bribed, bullied, or manipulated. You can fake a profit. You can fake a balance sheet valuation, but you cannot fake a bank balance. If the P&L is Instagram, the cash flow statement is the police report. You're tired. You just finished the P&L and the balance sheet. Why do the accountants need another spreadsheet? Here's the nightmare scenario. Your P&L says profit $1 million. You go to the bank to withdraw money for a celebration dinner. The ATM says insufficient funds. You scream, "But I made a profit." The ATM does not care. The ATM runs on cash, not accruals. The cash flow statement exists because of that disconnect. It explains the mystery of, if we are so profitable, why are we so broke? Imagine you own a $10 million mansion. You are, on paper, incredibly wealthy. However, your tenants have not paid rent in 6 months. The roof just collapsed. Repair cost $50,000, and your wallet is empty. You walk into a Starbucks. Barista says, "That'll be $5 for the latte." Do you know who I am? I have $10 million in assets. My net worth increased by 5% this year. Barista says, "That's nice. That'll be $5. You cannot pay for coffee with retained earnings. You cannot pay wages with accounts receivable. To the outside world, you look like a tycoon. To your stomach, you are starving. The cash flow statement tracks the actual coins in your pocket. It ignores the mansion value and focuses entirely on whether you can afford that latte. The over-caffeinated lawyers divide your cash life into 3 specific buckets in IAS 7. This tells us how you are generating money. Operating activities. This is your day-to-day business. This must be positive. If you are not making cash from your actual business, you are dying. Investing activities. Buying or selling long-term assets. This is usually negative for growing companies because you are spending money to buy new factories. Financing activities. Dealing with the banks and shareholders, taking loans, paying dividends, issuing shares. This depends. If you are borrowing to survive, it's bad. If you are borrowing to expand, it's good. Here's the takeaway. Profit is an opinion. Cash is a fact. I've seen companies with negative profits survive for years because they had positive cash flow. And I've seen companies with massive profits go bankrupt overnight because they ran out of cash. Cash flow is the oxygen. You can hold your breath for a while, but eventually you need to breathe.